The world of cryptocurrency is unpredictable, but leveraging AI to make data-driven forecasts gives us an edge in understanding where the industry is headed. This video explores the biggest crypto trends based on current market data, emerging technologies and historical patterns analyzed through AI models. These predictions highlight potential developments in regulation, adoption, technology and key players in the crypto ecosystem. The first prediction is a massive adoption of central bank digital currencies. The rise of cryptocurrencies has triggered a worldwide response from central banks, leading to the development of central bank digital currencies. By 2025, it is expected that CBDCs will be widely adopted by major economies as governments seek to regain control over monetary systems disrupted by private cryptocurrencies. AI analysis of global economic trends show that the shift towards digital payments has accelerated with cash usage declining in many countries. Now this decline, combined with growing concerns over the regulatory challenges of cryptocurrencies, has pushed central banks to explore the creation of their own digital currencies. China is leading the way with the digital yuan, which is already in a trial phase in several cities. The European Central Bank is also exploring the development of a digital euro, and numerous other countries, including the United States, are researching their own versions. By using AI to predict the trajectory of CBDCs, it becomes clear that their adoption will address key government concerns, including monetary control, economic stability, and efficient payment systems. Unlike decentralized cryptocurrencies like Bitcoin, CBDCs will be fully regulated and centralized, giving governments complete oversight of their monetary policy. The second prediction is that DeFi will continue to disrupt traditional finance. Decentralized finance has emerged as one of the most transformative innovations in the cryptocurrency space, offering financial services without intermediaries like banks or brokers. By 2025, AI models predict that DeFi will grow into a legitimate competitor to traditional finance, with interoperability between blockchains and user-friendly platforms becoming the norm. Now, DeFi projects such as lending, borrowing, staking and yield farming have already attracted billions of dollars in investment, creating a parallel financial ecosystem that operates outside the constraints of conventional banking. One of the key drivers of DeFi's growth is the promise of financial inclusivity. Unlike traditional financial systems, DeFi platforms can be accessed by anyone with an internet connection, offering a wide range of financial services to unbanked and underbanked populations. Moreover, AI analysis of transaction trends reveals that as DeFi continues to mature, it will focus on improving security and simplifying user experiences, making it more accessible to mainstream users. With governments cracking down on traditional financial practices and raising fees, DeFi offers an attractive alternative that will only gain momentum in the coming years. The third prediction is blockchain scalability solutions will go mainstream. Now, one of the most significant challenges facing blockchain technology is scalability, which is the ability to handle increasing amounts of transactions without compromising speed or efficiency. AI-based predictions indicate that by 2025, blockchain scalability solutions such as layer 2 technologies will become more mainstream. And these technologies, including rollups, sidechains and sharding, are designed to increase transaction throughput and reduce costs, making blockchain networks more scalable and sustainable for mass adoption. Ethereum, which is the second largest cryptocurrency by market cap, has already implemented Ethereum 2.0, which introduces staking and rollups as scalability solutions. Other layer 2 technologies such as Optimism and Arbitrum are also gaining traction, offering faster and cheaper transactions. Now, AI-generated forecasts suggest that as blockchain networks continue to expand, L2 solutions will be crucial for supporting decentralized applications and increasing the number of users without compromising efficiency. And these advancements are essential for making cryptocurrencies and blockchain-based services accessible to a global audience, particularly in sectors like finance, healthcare, and supply chain management. The fourth prediction it did is that AI crypto integration will lead to new use cases. The convergence of artificial intelligence and blockchain technology is poised to revolutionize various industries, from healthcare to supply chain management. AI-driven blockchain applications are still in their infancy, but by 2025, AI analysis suggests that this integration will create powerful new use cases, particularly in the field of smart contracts. AI-powered smart contracts will allow for more complex autonomous systems that can make decisions and execute transactions without human intervention. One of the most exciting prospects for AI crypto integration is in the development of decentralized applications that can learn from data and optimize their performance over time. For example, AI can be used to improve the efficiency of decentralized finance protocols, enhance security in blockchain networks, or optimize logistics in supply chain management. AI models from leading universities predict that as these technologies mature, they will unlock new opportunities for innovation, particularly in sectors that require automation, security, and transparency. By combining the decentralization of blockchain with the intelligence of AI, a new era of technology-driven solutions will emerge. The fifth prediction is that more governments will impose strict regulations on cryptocurrencies. Now, as cryptocurrencies become more widely adopted, governments around the world are likely to introduce stricter regulations to mitigate the risks associated with decentralized financial systems. AI models predict that by 2025, regulatory frameworks governing cryptocurrencies will be far more stringent, particularly in developed economies like the United States and the European Union. This will likely manifest in more rigorous know your customer and anti-money laundering requirements, as well as restrictions on the use of privacy-focused cryptocurrencies. One of the main reasons for the increased regulatory scrutiny is the potential for cryptocurrencies to be used in illicit activities such as money laundering, tax evasion, and financing terrorism. Regulatory bodies like the US Securities and Exchange Commission and the European Commission have already begun to tighten the rules around cryptocurrency trading and investments. AI analysis of legislative trends show that governments will focus on ensuring that cryptocurrencies operate within existing financial regulations, while also protecting consumers and minimizing the risks associated with volatile and speculative markets. Right, before we look at the next 5 predictions made by AI, I want to remind you that I'm not a registered financial advisor. My videos are meant to be educational and entertaining only. Always do your own research and only invest money you're willing to lose, because even though you can gain a lot in crypto, you'll most likely lose it all. And while we're taking a break now anyways, let's also take a quick moment to thank today's sponsor, which is Decent. They are a hardware manufacturer that offers 2 types of hardware wallets. The first one is a biometric hardware wallet where you can use your fingerprint to log in, sign, and to verify transactions. Then the second one is their all-in-one card wallet, which is ideal for on the go because all you need is your phone and the NFC technology to be able to manage your cryptocurrencies and to do the necessary transactions, which means that you will never need to charge your hardware wallet, and that makes it super convenient. Now, in the description, you'll find discount links, so be sure to check them out. Prediction number 6 is that NFTs will evolve beyond digital art into ownership of real-world assets. Now, non-fungible tokens exploded in popularity during the early 2020s, primarily as a medium for buying and selling digital art. However, AI predictions suggest that by 2025, NFTs will evolve into a much broader tool for ownership and investment, extending into real-world assets like real estate, intellectual property, and luxury goods. Tokenizing these assets using NFTs offers a unique way to manage ownership rights, transfer assets, and democratize investment opportunities. For example, real estate can be tokenized into NFTs, allowing individuals to own fractions of a property, making real estate investments more accessible. Similarly, intellectual property rights can be managed via NFTs, offering a secure and transparent way to track ownership and royalties for digital creators. AI trend analysis shows that as NFTs evolve beyond digital art, they will play a significant role in various sectors, particularly in tokenizing assets that have historically been difficult to fractionalize or transfer. This will open up new opportunities for investors and create more liquid markets for traditional illiquid assets. And then on to number 7, which is interoperability between blockchains will be crucial for ecosystem growth. Now, one of the biggest barriers to widespread blockchain adoption is the lack of interoperability between different blockchain networks. Currently, most blockchains operate in isolation, making it difficult to transfer assets or data between them. However, AI models predict that by 2025, interoperability will become a key feature of blockchain ecosystems, enabling seamless communication and exchange of value between different platforms. Projects like Polkadot and Cosmos are already making strides toward achieving cross-chain interoperability, allowing different blockchains to communicate with one another. Now, AI analysis also suggests that as these solutions mature, they will play a critical role in the growth of the overall blockchain ecosystem, particularly in sectors like decentralized finance, gaming, and data sharing applications. By enabling different blockchain networks to work together, interoperability will create a more interconnected and efficient decentralized web, paving the way for mass adoption. And then prediction number 8, which is institutional investment in cryptocurrencies will reach an all-time high. Now, institutional investment in cryptocurrencies has been growing steadily over the past few years, and AI-based predictions indicate that by 2025, institutional investment will reach an all-time high. Hedge funds, pension funds, and large corporations are increasingly recognizing the value of cryptocurrencies as an alternative investment vehicle, particularly in times of economic uncertainty. Bitcoin and stablecoins are likely to remain the preferred assets for institutional investors due to their relative stability and liquidity compared to other cryptocurrencies. The AI analysis of trading volumes and market trends reveals that institutional investors are particularly drawn to the potential of cryptocurrencies to act as a hedge against inflation and currency devaluation. As the regulatory landscape becomes clearer and as more financial products like Bitcoin ETFs and cryptocurrency-backed bonds become available, institutional investment in the space will continue to grow. And this influx of capital from institutional investors will further legitimize cryptocurrencies as an asset class and help stabilize the market over time. And then prediction number 9, which is about privacy coins, and they will face a major crackdown. Now, privacy-focused cryptocurrencies like Monero and Zcash have long been a subject of debate due to their ability to obscure transaction details and user identities. By 2025, AI models suggest that privacy coins will face increasing scrutiny from regulators, leading to a major crackdown. Governments around the world are concerned that these coins can be used for illicit activities, and many exchanges have already delisted privacy coins to avoid regulatory backlash. AI-generated forecasts show that as regulatory frameworks for cryptocurrencies become more stringent, privacy coins will find it increasingly difficult to operate within the legal boundaries set by governments. And while privacy advocates argue that these coins offer necessary protection for individual freedom and security, regulators are more focused on preventing their misuse. And this crackdown on privacy coins is likely to limit their availability and usage, pushing them to the fringes of the cryptocurrency market. Now, I've also mentioned this before. Personally, I'm staying away from privacy coins. And the whole reason for that is because I expected as AI to just be a no-go when it comes to the future and regulatory compliance. And then the final prediction, Metaverse and crypto will merge for massive economic potential. The Metaverse, which is a digital universe where users can interact in real time through avatars and virtual assets, has seen rapid development in recent years. By 2025, AI-driven predictions suggest that the convergence of the metaverse and cryptocurrencies will create a massive digital economy, with crypto assets becoming the primary medium for transactions, ownership, and identity within virtual worlds. The integration of blockchain technology into the metaverse will enable a decentralized economy where users can buy, sell, and trade digital goods, including virtual real estate, art, and avatars, all powered by cryptocurrencies and NFTs. Platforms such as Decentraland and the Sandbox have already laid the groundwork for this convergence, offering users the ability to purchase virtual land and assets using cryptocurrencies like Ethereum and their native tokens. Virtual real estate has seen a surge in value, with users and investors speculating on the future utility of these spaces for businesses, entertainment, and social interaction. By leveraging blockchain, these virtual assets can be securely owned, traded, and verified, ensuring transparency and authenticity in the digital marketplace. AI forecasts indicate that as the metaverse expands, so will its economic potential. The use of cryptocurrencies will become the backbone of this new economy, facilitating not only peer-to-peer transactions, but also enabling decentralized governance through decentralized autonomous organizations, or also called DAOs. Now, users will be able to vote on decisions affecting virtual worlds, determining the rules of interaction, commerce, and development within these spaces. Furthermore, the integration of NFTs will play a critical role in the ownership and exchange of digital assets within the metaverse. Now, NFTs offer a way to tokenize unique assets, from virtual property to in-game items, creating a robust secondary market for virtual goods. By 2025, it's expected that NFTs will extend beyond art and collectibles, encompassing everything from fashion items for avatars to digital representations of real-world assets. AI-driven insights show that this will create a new wave of economic opportunities, especially as brands and companies begin to establish their presence in the metaverse, offering products and services in a digital format. In addition to commercial transactions, the metaverse will see the emergence of decentralized work environments, where users can earn cryptocurrencies through play-to-earn gaming models or by providing services in virtual economies. AI models predict that the rise of metaverse jobs will become a significant part of the global digital economy, with freelancers, creators and developers earning income entirely within these virtual ecosystems. The merging of the metaverse and cryptocurrency will not only redefine economic models but also challenge traditional notions of ownership, identity and value. As AI continues to enhance both blockchain and virtual reality technologies, the line between the physical and digital economies will blur, opening up limitless opportunities for innovation and wealth creation. By 2025, the metaverse powered by cryptocurrency will represent one of the most significant economic and social transformations of the digital age. So, how did AI do? Do you agree or do you disagree with it? Let us know down below. Now, the sources that AI has used can be found in the description for your convenience. That's it for now, and I'll see you guys next time. Doei!